The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks Investment Research. I've got two more aggressive growth stocks to put on your radar screen, and this is going to be a fun one here, so let's just get right into it. The first one is Nvidia Corporation, and the ticker is NVDA. It is a Zacks Rank #1 strong buy, and it has the divergence that I love to see, an A for growth on the style score and an F for value. Now, I love to see that divergence because it tells me right away that I'm on the right path, because growth investors and value investors are inherently looking for different things. So let's kick ahead and see why this stock is a Zacks rank #1. So we're going to jump over here. This is the detailed estimates page, and we can see that earnings estimates have been moving up for Nvidia. 60 days ago, the current quarter is at 168. It's moved up to 183, 184 to 199 for the next quarter. For the full year, which the Zacks rank looks a little bit more, puts a little more weight on the idea of the full year, but that has moved up from 705 to 793. That's a big move right there. And then next year up another 50 cents. Estimates just keep moving up. As we see here, 12 moves higher from analysts, all these big upgrades the last 60 days. 0 downgrades here, 0 moves lower really in the earnings estimates. And the company just continues to perform. If we take a look at the earnings history here, we see all kinds of big beats. These are average positive earnings surprises of 40%. When you get something like that, you're going to see a positive chart. And speaking of that positive chart, let's just take a look at Nvidia. Really up and away, beating the number every time. Anyone who has ever bought the dip here or here or here and what looks to be here has made out. I mean, look at this over the last year here. I can see 4 decent-sized dips, if you will, in the stock. Any one of them, pretty much all of them have worked. This is kind of a recent one, so I would be an advantageous buyer of any dip for Nvidia. All right, let's jump ahead to the next one. Now, this one's going to be a little bit different, so hold your horses. This one is Tesla. Tesla's ticker symbol, if you didn't know it already, it's TSLA. It's a Zacks rank #2 buy, and it has an F for growth and an F for value. And you would say, boy, Brian, this doesn't belong here in aggressive growth rank buys, because it has a F for growth, and we always look at A's. But sometimes it's not about the growth numbers that the style scores give us. It's about the growth of the company, and that's what I'm looking at here. But let's run through what we normally look at anyway for the earnings estimates, and we can see why this stock is a Zacks rank #1 or a #2. So we can see estimates aren't really moving the right direction here, but we can, we see a blizzard of these moves lower right here. This is a lot of negativity there, but then there's also a lot of positivity. Look at all these moves higher for estimates. So the analyst community is a little shaky here. Now, obviously, these numbers aren't going the right way. A loss of 268 is worse than this, but same here for this quarter, and obviously there's been a big move here as well. But really, this stock isn't really about earnings estimates, even though next year is supposed to be positive. This stock is more about really the production of their latest car. Let's take a quick look at the chart here, and just to highlight the idea, like their earnings estimates have just consistently year over year started high, moved lower, started high, moved lower. But you got to ask yourself the question, this company isn't really about that. If you look at this from the technical perspective, this is a channel here, and then that break up, and then a channel here, and boy, where are we? We're almost at what we would think to be is another break up. But why is that? Why is it the case? Why are we just about to have this? And why are we talking Tesla today? Well, just the other day, I wrote an article about the upcoming sales numbers. So we're going to get those sales numbers in July 6th. And, Bloomberg, and this is the article, this is Tesla shorts are doomed. Bloomberg um, has a VIN forecast, and I've totaled up their number, and they're looking at about 24,000 Model 3 cars. So just the Model 3, 24,000. Goldman Sachs yesterday uh, put their number for sales at 22,000. Now, this 24,000 number is a little deceiving here because still doesn't count the final 2 weeks of the quarter. And I say if you average 4,000 production cars per week in the final two, you could have 32,000 made. But that's really not the big story here. And the thing about why that's important, those cars are going to be in transit. So we could have a 10,000 car number that's in transit that's built into the next quarter, and that becomes meaningful when you talk about Tesla and the idea of where it's headed. I believe that Tesla is actually going to come in ahead of the Goldman number. I think the consensus is at about 28,000, and I believe a short squeeze is coming. And I believe that profitability is right around the corner. Tesla's going to show that, and this stock is going to blister here in the near term. Well, that's it for this week. Be sure to join us next week when we take a look at two more aggressive growth stocks to put on your radar screen.